Now we've got the latest numbers for the CME FedWatch tool showing investor bets placing roughly 50% chance of Fed cuts coming in March. That is down from 67% last week and 71% about a month ago. Now, as cuts come into question, investors becoming more wary of interest rate sensitive sectors. So for more on this, we're going to bring in our own Josh Schafer. And Josh, we were just talking about this, but those traditional plays that tend to perform well or badly when interest rate hikes are higher, that's not necessarily playing out how it does historically.
So we've kind of had the reverse of the rally that we had over the last 2 months, right? When you take a look at kind of the action that we've seen in the market to start 24, when you just think broadly, it was small caps are ripping, right? Financials are ripping. Utilities are going up, real estate's going up. We'll just take a look at the market action today alone as we're thinking about people sort of coming back on those March rate cuts. Maybe the rate cuts come later. Maybe we don't get as many cuts. You've got utilities down almost 2% and real estate almost down 2%, the two biggest laggards in the S&P 500 today. And it just seems like overall we're seeing people sort of step off those bets. Now, one interesting thing to point out with that, though, is as we're stepping off the rate cut bets in March, it comes with relatively good economic data. Right. The GDP Now forecast coming out today after retail sales projecting 2.4% GDP growth. You can see how it's moved up over the last couple weeks there. And I thought Neil Dutta over at Renaissance Macro had a really good point with that. Well, if we're having rates move on good data, that's overall a good thing for stocks in the long run, right? Because good data would mean good earnings, and good earnings would mean good things for stocks. So it sort of gets to the fact that overall, maybe we just need to wait a little bit. Yeah. Like maybe the trade's still there. It's just we got a little bit over our skis, and now we have to kind of just let the dust settle and see where it goes.
How much do you think, Josh, this is, and we've talked about this, just folks kind of trimming some of their winners here? Because we've had strategists come on and say, listen, I like small caps. I still like small caps, but I'm booking some of my profits.
Yeah, no, definitely. I talked to Keith Lerner over at Truist a little while ago, and he said when you have markets rip the way they did to end the year, you have to expect a little bit of choppiness at some point. It's going to happen. But he had highlighted at the beginning of January, and he said he's still standing by the call now, if you wanted to buy small caps as they were sort of rising at the end of the year, well, now might be your time to buy them, right? Because they're well off the highs that we saw at the end of December. If you look at the Russell 2000 over the last 3 months, we're basically back to where we were right before that Fed meeting. Right before Powell said, all right, go buy the soft landing stocks. We basically have the Russell 2000 back at that level, and he pointed to now is kind of a key point for that narrative. If we're going back to those levels, we know a little bit of technical analysis, we love to test those levels, right? Do we go lower or do we bounce back up? And so that's going to be a key thing to watch, I think, in the next couple of weeks, guys, as we get towards some of these moving averages, is there people looking to buy the Russell as it comes back down, buy small caps, buy some of those interest rate sensitive sectors, or is no one looking to buy it and we keep selling and the narrative shifts a little bit. But for now, narrative not changed yet. Just, we're waiting. We're waiting to see if the narrative
I love in all the notes that we get, Josh, everything says the narrative's not changing, but also we think maybe the Fed is not going to cut rates when we say they are. Right. So it kind of is
There's always
changing.
Uncertainty, right? There's always uncertainty.
Waiting more data, as Jay Powell would say.